Digital tools have moved the needle towards financial independence for women, but there are new and more challenging barriers to contend with. In this episode, we will take you through a mix of factors that influence women's experiences of digital finance, with the result that it rests somewhere in the middle. Though there is a net increase in the ownership of phones, it does not necessarily translate into greater financial autonomy or usage for women. For example, Kohinoor Begum from Lamonnihat, Bangladesh, used to be paid in cash, but now her salary is directly sent to her digital account. While the transaction is swift, she has lost control over her money because her husband manages the only phone in their house, her bank account, and her PIN. By contrast, the women in Indonesia are as digitally savvy as men because they go out of their social circle to work, increasing exposure. Even when women have access to phones, they may stick to basic functions like calls, entertainment, and social media. They don't necessarily opt for digital finance even when they shop online. This self-help group in Mirzapur, Uttar Pradesh uses e-commerce, but they prefer to pay cash on delivery because they are not sure of their digital skills. So yes, women have constraints, but we would like to offer an alternative perspective to their relationship with money and ask, how do they overcome their constraints? We met Rahela in rural Bangladesh. If you observe closely, you will notice a small knot at the tail end of her kurta. There are scores of women like her who tuck away small sums of money from their daily expenses in a cupboard, a jar, or at the helm of their skirts. This is such a common practice that it is often used as a symbol of thriftiness, pride, and security in popular culture. In most societies, women learn to manage money early on because of the way gender roles are divided. Men earn, and women run the house on their earnings. Women often prefer cash or other tangible forms of finance. Many communities have strong traditions of collective saving, such as the Village Savings and Loan Association in Uganda, where cash is stored in lockboxes. Others save by investing in gold, as seen in India and Indonesia. In Bangladesh, mobile money centers are typically located in busy market areas where women can't move freely. It can be uncomfortable to get onboarded in a public space as they have to remove their hijab, smile, and share personal information like their phone numbers out aloud. Door-to-door services are therefore crucial. India has a statewide program on financial inclusion where female agents called BC Sakhis visit women at home in rural areas to support them through their digital journeys. Social welfare programs have effectively encouraged women to open bank accounts in all the 4 countries where we conducted our research. This has opened up new opportunities for them as they can not only access direct benefits but loans and microcredit too. But the service journeys are not optimized for digital access. Take India, for instance. Many women start banking with microfinance institutions, cooperative banks, or regional rural banks that are not yet digitally enabled, making usage more cumbersome. Many women rely on their trusted network to get started. Hanisa Begum lives in a conservative household, but her nephew helped her open a bank account on her phone. This immediately increased her autonomy over her money without needing to approach unfamiliar agents. There are strong instances of sharing and peer support too. Yamuna is a middle-aged fisherwoman in Visakhapatnam, Andhra Pradesh. She began her digital journey by using her son's QR code to accept payments. This helped her gain confidence with the result that she assists others in the market too. Yamuna shares her QR code with them. It is a community resource now. Across countries, we found that micro-entrepreneurship is a major driver of adoption for digital finance. Service providers accordingly offer specific initiatives for women in business. We met one such respondent in rural Lamongan, East Java, who sells snacks in front of her house to supplement her family's income. She appreciates the ease offered by digitization because her days can be hectic with work and 2 children to raise. This is the story of many women. They find ways to manage, save, and multiply their resources discreetly. How might we improve digital finance to accommodate this legacy? How might we create services and features that cater to women's financial habits, preferences, and inherent wisdom? How can we make digital finance work for them?